Hello and welcome to Livewire's Fund in Focus. I'm Ali Selby and today we're sitting down with the Co-Chief Investment Officer of Talaria Asset Management, Chad Padowitz, to learn all about the firm's Global Equity Fund. Thank you so much for joining us today, Chad.
Thank you, good to be here.
It's obviously easier than it's been in a decade for investors to generate income thanks to higher interest rates. How are you exploiting that opportunity at Talaria?
With interest rates, I think it is important to consider the inflation rate as in the real return. So you've certainly had inflation go up quite a few percent in the last couple of years. So even though interest rates themselves have risen, the real return you're getting hasn't moved that much. It's probably only about 1% at the moment. So I think it is important to have access to income and capital gains from a differentiated source, even in this environment. And what we do is we're a bottom-up fund manager. We look at capital gains from the shares we want to buy. Our implementation process generates north of 7% a year. So we have a combination of multiple sources of return, less reliant on dividends, less reliant on interest rates, less reliant on the economic environment.
How does your process differ from that of your peers? How do you generate income for investors?
So the key difference that we have against other long-only fundamental funds or investors would be the manner in which we implement. And the way we do that is via an options implementation strategy. The way we buy shares is different because of that.
Can you take us a little bit deeper into that options strategy?
Yeah, so what happens is once we've decided we want to own a company and we think, say a company is trading at $100 and we think it's worth $120, rather than buying it directly, which what you would potentially conventionally do, we sell a put option, which is a promise to buy that share at say $96. So it's trading at 100, we're agreeing to buy it at 96 in 2 months' time. We'll charge $3 premium, so we're charging a premium for agreeing to buy it, much like an insurance premium. And in 2 months' time, if the share's below 96, we will take ownership of it because we 100% cash back it, so we've got the money behind it. But our net cost will be 93. So at 96, we got paid $3.93, a lot lower risk. If it's above 96, we won't take ownership, but we still get to keep the $3 and we might redo that. Those $3 add up to give us our income component.
Volatility is quite important to your process. Why do you think volatility is so low right now?
Yeah, well, volatility tends to be low when there's less uncertainty, when people are less concerned about the future, when markets...
Is there not a lot of uncertainty right now?
Well, there is uncertainty, but from a market perspective, it seems to not assume that there is. There seems to be a lot of confidence that the economy is on sound footing, that earnings are going to deliver. We believe that is somewhat imprudent view to be taking. But volatility tends to be low when markets are hitting highs and concern is at the lower end. And that seems to be where the market's pricing in right now.
What happens to your strategy when volatility is low and also when volatility is high?
Well, we benefit from volatility. In all ways, we get access to better quality companies, we get a bigger buffer in terms of the price we can pay, and more importantly, we get a higher option premium, so the amount we do get paid. So we always benefit when volatility is higher. Just to give you some numbers around that, when volatility is very low, we tend to earn around 6 to 7% in option premium. When it's very high, like 2020, for instance, we earned 11%. So we definitely benefit when things are higher, but even when it's quite low, we earn a very respectable high number.
What has been some of the fund's strongest performers in recent times?
We have a reasonably diversified portfolio. We look to make our returns from a variety of places rather than relying on one or two shares. But just talking about a couple of shares that have done well, we've done very well with, we have actually a Mexican conglomerate company that's a convenience store and a Coca-Cola bottler called FEMSA. We own a security company in Japan called Seacom, catering company in France, Sodexo. They've all done very well and contributed to returns.
Have there been any stocks that have dragged on performance?
Well, it haven't been, it's been a pretty strong market, so we haven't really had specific shares that have been very poor performers, and obviously our process is to try and limit those in any case. But I would say we have a high exposure in pharmaceuticals, which have not participated, and that's really because they haven't been part of the growth narrative, the AI narrative, the consumer cyclicals as in a better economy narrative. But they've become, in many cases, we've actually bought more of them because they have very good valuations, very good balance sheets, and very defensible business models, particularly in a weakening economic environment.
As you mentioned before, it's been a very, very strong market in 2024. I think most of the world's indices have hit all-time highs. How has the strategy performed in recent times in that environment? And then since inception, how has the fund performed as well?
So in more recent times over the last 3 years, we've averaged over 11%, which includes 2022, which was a very weak year for the market, which dropped around 15%, and we actually went up over 8%. Since inception, we've generated over 7.5% a year, which is over a 16-year period, which shows the long-term compounding nature of the product.
Last question for today. How would this fund sit within a portfolio? How can investors use it?
So the fund has many sources of return, which allows it to be used in different ways. So from a top-down level, it does free up risk budget because we take a lot less risk. It's very lowly correlated, so it blends well with other funds. It has a differentiated source of return. But because we have multiple sources of return for our capital gains, income, we're able to provide long-term gains from market opportunities, from equity market opportunities, as well as the income component as well.
Well, thank you so much for your time today, Chad. It was awesome to learn all about the Global Equity Fund.
You're welcome. Thank you.
If you enjoyed that too, don't forget to subscribe to Livewire's YouTube channel. We're adding so much great content just like this every single week.